Ulta Beauty fell over 14.5% yesterday. I made this post on Twitter claiming that it's a pretty good, amazing actually buying opportunity because a lot of the retailers will likely suffer also in 2024, even luxury brands like Gucci, maybe LVMH. But Ulta does not have any debt and it has a lot of free cash flow, a lot of cash. So it's well positioned to buy back stock at much lower prices and create amazing value for long-term investors. And this post got a lot of attention today. Ulta is only up like 3%, so it's still within a reasonable range. And in this video, I'm going to explain to you why I believe Ulta Beauty is a high quality company trading at fair value. Now, most of you are familiar with the stock or familiar with the stores in general, say place in the United States. You buy a lot of makeup from there, hair products, many other things. Even they have services, so a lot of girls, they go there, they get their hair done or a lot of different things, which I really like in terms of how they are trying to monetize the stores. They have many different brands from higher end range in terms of prices and the lower end range. So if people cannot afford a certain brand, they want to buy a cheaper brand, they can also keep going to Ulta Beauty and buy the cheaper brand. So they have many different variety of price points, which is very, very important for this retailer. Now, this retailer has a very loyal customer base. Over 95% of the shoppers are Ulta Beauty reward members. A lot of them, they just keep going there. And this is the main argument against the stock. This is what people were telling me last year when Ulta was trading at $370 per share. And I was doing this video and they told me, oh, but Ulta has no moat. And this is me, Ulta has no moat. Amazon's taking over. Yes, maybe it's true, but Amazon has been present over the last 5 years, and Ulta has been increasing earnings per share. It has growing comp sales and doing many different things over the last 5 years, with Amazon being present, with Sephora being present, with all these stores being present. So maybe Ulta Beauty has something special, and it has a very loyal customer base, and this is something that you have to count in your assessment of Ulta Beauty. So yes, it does not have a moat, but people still like going there, and they've been doing so, and you could tell from the numbers. In terms of something else that they have that most people don't know about, they have a very small innovation fund, like an AI fund. They invest in a lot of AI companies, like some robots that does lashes and all kind of different AI stuff. They don't talk about it enough on the earnings call, but I've heard them talk about it in one of the CEO's interviews. Maybe if they talk about it a little bit more on the call, Ulta Beauty would maybe become an AI stock. I mean, I don't think so. But they have a lot of promising investment. It's under 500 million in some companies that could become something. So this is like a call option with Ulta Beauty. Now, in terms of their new plans, is to try to expand in Mexico in 2025. They partnered with a operator of a lot of luxury and higher end brands called EXO, I think, I have to pronounce it. They work with many different brands in South America, Latin America, like Banana Republic, Nike, and many, Tommy Hilfiger, Ralph Lauren, and many different brands that you most likely know. So Ulta Beauty is going to be expanding in Mexico in 2025. I'm not sure how this is going to work out. I'm not sure of the competitive space in Mexico, but I'm sure a lot of people from Mexico are maybe familiar with Ulta Beauty in the United States, and maybe they would like to shop Ulta Beauty in Mexico. So it would be something very interesting to see how it actually plays out, and it will likely be a source of growth for this company. So I'm excited to see how that plays out in 2025. In terms of the outlook, this is one of the reasons why the stock fell so much, and I think it was an overreaction. But the CEO was speaking at I think JP Morgan conference, and he said that they are seeing more slowdown than expected in the first 2 months, and he expects the comparable sales range, which is between 4 to 5%, to be at the lower end of their estimate. So it's going to be closer to 4% than to 5%. Maybe worst case is going to be 3 or 3.5%. And the stock sold off 50%. I mean, this was absolutely crazy. And this is normal for it to slow down. They had comp sales 8 and 9% last year. This is not sustainable. A lot of these retailers are going to face lower and lower comp sales. But this is good news, because if 2024's comp sales are very, very low, or they're just horrible, 2025 will actually be better, because if you compare them to 2024, they're gonna look like Ulta Beauty is doing something amazing. So it's a pretty good thing to do. But in terms of 4 or 5% comp sales, I think this is very, very normal. If you take the 2620 EPS to 27, and by the way, Ulta pretty much always beats on EPS because they buy back stock whenever the stock goes down. I'm gonna talk about it in a little bit, but 26 to 20, you're buying the stock right now at around 16.5 times earnings. Now, this is another argument that people gave me in the comments, is that, yes, but Ulta Beauty is not going to be growing as much as it used to. Well, when it was growing much faster, the stock traded up to 42 times earnings, and it traded in the mean of 26 times earnings. So when Ulta was growing massively, it was trading at 26 times earnings, and now you're buying it at a discount of 16 times earnings because the market believes that Ulta's Beauty's growth is over, which might be true, but it might also not be true because of the Mexico expansion, because of the new stores they're opening, because of different things they're trying to do. Maybe the AI fund, maybe something is going to happen with that, or maybe something else. The company has a lot of cash to do acquisition, a lot of cash to do many different things. I'm going to be explaining it here in a little bit. But in terms of the free cash flow, the company has around $1 billion of free cash flow every single year. So this is $250 million of quarterly free cash flow, and they have $766 million of cash and cash equivalent and no long-term debt. So they have a lot of cash to buy back stock in weakness. And this is what I want to see in a retailer that I want to buy. I don't want to end up like Dollar General. Dollar General was trading at record lows, but they had so much debt, so many dividend obligations and different obligations, they just could not buy back stock in a major way and take advantage of these prices. But this is not the case with Ulta Beauty. I mean, Ulta Beauty has been a massive buyer of its own stock. They bought back a lot of stock, 5 to 6% of the market cap over the last few years. Last year, I think they bought, I think 5.2% of the market cap. So my argument is that if the stock does go down, for me, it's good news if I'm a long-term investor because Ulta can take advantage of it, retire shares from the market, increase earnings per share, and create more value to shareholders in a much better way than if they had to pay a dividend. But if Ulta does not want to buy back stock, they have a lot of cash and a lot of the ability to grow. So this is the argument I don't understand. Oh, Ulta's Beauty's growth is over. Maybe it is, but maybe they can acquire another player. Maybe they could do something else. I mean, they have no debt. No debt and $250 million of quarterly free cash flow and $766 million of cash. To me, that's enough cash to try to help the company grow if they want to grow instead of buying back stock. So I'm not really with the camp that Ulta's Beauty growth is over or the stock is overvalued. Some people even told me it should be trading at $100 per share. That's 4 times earnings. So I'm not sure sometimes how people think about certain stuff. But yes, I mean, you have Ulta Beauty. That's what's been happening with the stock. I'm seeing a company at 16 times earnings with return on capital between 37% to 42%. And it's also been growing earnings per share around 15-20%. This is not going to be the case anymore. Growth is expected to be over the long term between 10 to 11%, 12%. So I would take maybe 11, 12% earnings per share growth. And the more they buy back stocks, the higher earnings per share growth is going to be. But let's assume 11 or 12% at 16 times earnings with a mean of 26 times. So I'm getting around 11 to 12% annual return from earnings per share growth. And I'm getting a potential multiple expansion from 16 times. I'm not saying to 26 times, but when I bought Ulta Beauty last year, it was around 15 times or 16 times. Then it got a massive multiple expansion to 20 times. So if that does happen, you could get more than 15 or 16% annual return on Ulta Beauty. So for me, just looking at the whole value proposition, no debt, massive, resistant free cash flow. Even though we have a recession, women are still going to buy makeup. People are still going to buy certain skincare and different products. And even if it's a lower price range, they can do it at Ulta Beauty. So yes, a recession might affect Ulta Beauty. Theft is going to affect Ulta Beauty. It's been doing so. It's nothing new. But I mean, I'm seeing a company 16 times earnings per share 10, 12%, 39% return on invested capital, a lot of free cash flow, and no long-term debt. I think there's a lot of opportunity to grow. And I personally believe Ulta Beauty here is fairly valued. It's not extremely undervalued because earnings can always go lower if we do have a massive, massive recession or something crazy happens. But for me, I think right here, Ulta Beauty is a buy. When I talked about it last year, it was trading around 360, 370. Maybe we're going back there, but maybe not. But this is just my opinion on Ulta Beauty, fairly valued, not undervalued, not overvalued. And I hope you enjoyed the video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.